Good morning, everybody, and welcome back to Schwab Coaching for the Wednesday edition of Trader Talk in today's market. I am your host, Kevin Horner. It is a sunny and beautiful morning here in Denver, Colorado, and I am pleased to be joined by Schwab's fellow coach, my fellow coach, that is, Mr. Brent Morris. Good morning, Brent. Great to see you again on this Wednesday. How you doing?
I'm doing good. You said sunny and warm or sunny in Colorado. It's ridiculously warm in Utah right now. I know we're getting a storm here coming up, but it should not be in the 60s in Utah in February, early February here. So anyway, it's nice. I'll enjoy it while I have it, but I'm actually rooting for a little colder weather.
You're right. We should enjoy it while we have it, but let's not get too far down the path of believing it's here to stay. Yeah, exactly. We always refer to this in Colorado as the fake spring. Inevitably, we get these 50, 60, even 70-degree days in February and early March, and then we're reminded very quickly that, this is a snow season. We get a lot of that slushy stuff. So I'm sure we're going to be getting more cold and more snow in the near future. So like you say, we'll enjoy it while we can. Speaking of enjoying things, I'm really glad you are all here today. We got plenty to get to, of course. Lots of charts. We've got some stocks in the news for earnings. We've got stocks in the news for earnings coming up. And we got a lot of those to look at with all of you. But make sure you're saying hi to our friend Cameron May there in the chat. He's going to keep an eye on things for us, and we'll also make sure that we have an opportunity to engage with your questions and comments there. So feel free to post for the duration of the segment, everybody. We go about 45 minutes in total. Now, if you're not already doing so, take a minute and follow the three of us on X. You can do that for us. I'm at Kevin Horner, CS. We've also got Brent available, Brent Moores, CS, and Cameron May, CS. We greatly appreciate that. Try to post for you throughout the week, and it's another good way for you to communicate with us outside of these segments. So if you're looking for specific questions or follow-ups, that's a good way to reach out. You are welcome to do that on X. All right, some reminders about our disclosures here. But before we do, I just want to point out, we do have these upcoming events. Don't forget, keep that schwab.com/events page as a favorites for yourself. And then you can go back and reference our registration links. Remember, we will post to give you a bit of a heads up where we're going to be. And then weeks down the road, you'll see a registration link become available. And you want to be one of the early ones in there. These registrations tend to fill up quickly. So if you have a chance, bookmark and check it frequently so you know where we're going to be. My next event will be that Scottsdale one. I'm looking forward to being out at the Phoenician there first week of March. Now, as always, I want to remind you that our discussion is exclusively informational and educational. We do not make any recommendations here, nor endorsements for any particular approach to trading the market. We do talk technical analysis. Remember to consider technical analysis a complementary viewpoint to your fundamental research. We do not encourage you to base decisions exclusively off technicals. We like to think of it, all of these ideas, these concepts, the information at your fingertips. This is all of it is a single piece to the puzzle, and one can use as many of those pieces to make your decisions as possible. Now, if this is your first time joining us, this is the agenda we use, everybody. We start broadly. We start out by looking at the major indices. So we'll look at the S&P 500, the NASDAQ 100, and the Russell 2000. And then we will move into some of the industry groups and sectors as well as some individual equities. So with that, let's kick it right into the S&P 500, Brent, where we do get started. You know what? Hey, does it feel to you when you watch this trend, the way we bounced off of that level on Monday's week open, you getting the impression or the feeling, Brent, that the path of least resistance remains to the upside here?
That's what the overall trend is saying to us. That's what the moving averages are pointing to, Kevin. I mean, the rate of ascent, so to speak, on the trend may be slowing a little bit, but there's really not much to the downside here. There's really if we're not breaking through support levels at this point. And so as long as we're not breaking support levels, least resistance, because the resistance, so to speak, are the support levels, if you will, on that. And even today, I mean, we're down a smidge, I guess, there, but it's nothing. And also, think of the early the week. Think of Monday. talk of tariffs and whatnot. People are concerned. Well, you know, really, how concerned are we? I mean, it's down. It was down a couple percent or something like that, but we just rebounded, and it's just kind of the new normal here. This, you know, in the market.
Yeah, I'll admit that open on Monday didn't feel great. But what does feel good was the action we got from yesterday relative to Monday, right?
Yeah.
If you're bullish, you got price action that you're happy with, meaning we opened weakly but finished strongly. So we had a day where our open on Monday was well below our close. And then we got a whole day yesterday, a close above the high of the low day being Monday. So for some, Brent, it looked like a bit of a continuation pattern with a short-term test at a higher low with the open on Monday.
Yeah, I mean, that's a strong bounce, a strong reaction to what we've had here. So, and you know, we've gone through earnings season. Yesterday we had, well, we'll get to Microsoft here, but you know, excuse me, Alphabet here going forward. But you know, there's some bad stuff that comes out, is some, you know, less than desirable news that's coming out in the market, but it's not killing the market right now. So, and when the market is able to shrug off some of the less desirable news, that's a bullish market.
Yeah, that's a good point. You know, we have to, in addition to price action, we can evaluate the action by how do we start the day versus how we finish. One of the things we like to see are weak opens that bring buyers in. One of the things we don't want to see are positive opens that are faded into the close, giving us red candles or closes below the opens. We don't like that action. So we can absolutely, in addition to the optimistic viewpoint of price action, Brent, we can also take an optimistic view relative to the way the market acts. Is that right? Is that one way that you look at it?
Yeah, and that's just what we saw in last December when we had that kind of, I guess, disappointing December, so to speak. You know, people were looking for Christmas rally type stuff. What we saw were decent opens, but every day it just seemed like it was fading towards the end of the day. This is the opposite right now. And so that gives you, it's kind of like intraday strength gives people confidence in the market.
Absolutely. All right. So if we're looking at, I saw a couple of you in here noting this, maybe look, it was Ray. Yeah, Ray's talking about the potential here for what could be a bit of a cup and handle. You know, we try not to get too bogged down by titling these moves, because the reality is, whether, you know, you're a frequent user of technical analysis or maybe someone who's getting familiar with it, the truth of the matter is the pattern itself may not be as important. What we call the pattern might not be as important as just standard rules that technicians apply. Basic support, basic resistance, price action in and around lows and highs, gap levels, etc. But I could see this acting as a bit of a high handle for a potential cup and handle type of move, Brent. And if you're bullish, once more, just the fact that we set that higher low and have managed to maintain, even though it's been kind of choppy, we've been back and forth, but we've not broken down. I think ultimately that's the way that bulls are taking the price action. They're remaining optimistic and taking in all this new data that continues to basically let us know that, hey, we continue to push higher in the face of concerns. Brent, it's not uncommon that we do that, is it? The idea being that we often will utilize all of this so-called negativity that is being talked about every single day, and the market continues to push higher. It's not uncommon at all, is it?
No, that's not uncommon at all. And you know, it will be interesting to see if we can break through like the 6,100 level or in the 6,128, which was our high, I guess, level there on that. But in terms of, you know, in terms of resistance levels that are potentially there, but there's just not, like we said, there's nothing that bearish on that. And so I think that'll be the true test, though, if we can break to new highs.
Yeah, I sure would. And for some of you, it might just be trading outside of that downtrend line from the peak, which is just 2 weeks old. So if you started trading above, say, 6,040, which would be higher than yesterday's high, for example, you might see some momentum-based moves coming in here. But As always, know how you want to act. As I often say, you want to have a plan, and then you want to give yourself some easy steps to follow as the price action plan plays out. So you've given yourself kind of that roadmap to how you're going to handle things. All right, let's peek in on our NASDAQ 100 off a little bit more here, almost 0.5%. But ultimately, Brent, it looks very, very similar here to what we've been seeing with the S&P 500.
Yeah, for quite a while, both the Nasdaq and the S&P chart have looked very similar. The Nasdaq just seems to move a little bit more than the Nasdaq seems to move a little bit more than the S&P 500. When the SPX goes up, the Nasdaq tends to go up a little more. When the SPX goes down, the Nasdaq tends to go down a little bit more. But the general look of the chart looks about the same. We're showing strength. We went down Monday significantly, but we immediately bounced. We saw the higher afternoon closes on that. We have some potential resistance levels around the 22,000 level, I guess, probably on that. And we're above our upward sloping moving averages, those and decent support levels. So again, the general trend, if you just look at the chart, it's clearly up from the left side of the chart to the right side of the chart. You got a pretty strong trend that maybe has softened a little bit, but nothing bearish at this point.
Yeah, I think that's a good point. The sense that, sure, we're not at highs, and it might be more choppy than bulls would have preferred. I mean, it's not as consistent uptrend as we'd witnessed in this period from September through the end of the year, for example. But nonetheless, lots of higher lows along the way, and a trend that holds at this point. So, levels at which we could maybe make some alternate viewpoints under 21,000 here approximately. That's a ledge that could be acting as support. If you take out that, then you might look at the last low we just made. But reminder that it doesn't have to make significant moves. Commonly, we'll like we saw this week, we open weekly, we get buys. Maybe we get, if we don't continue to the upside, maybe we retest this low or perhaps even the last low back here. But you know what? Everything remains in this longer run bullish trend. It's really easy to see, of course, in these longer range weeklies. If you're one of those traders who doesn't pay attention to the day-to-day machinations nearly as much and pays far greater attention to what's happening on the weekly chart, you've really had very few reasons to be kicking yourself out of the NASDAQ trend over the last 2+ years, really, or I should say more like 15, 16 months. But nonetheless, a bullish uptrend in the NASDAQ as well. Anything you might like to note here, Brent, as it relates
just saying, I think it shows the value of maybe looking to some of those longer term time frames, Kevin, because it can give you some perspective. We sometimes we get caught up in the little day-to-day motions there. And one other thing I would say is this: even looking at the shorter term chart, where we're having a little bit more of a, maybe a little softening of the trend, maybe that's not a bad thing necessarily if you're a bull. When you hear all this talk about, market valuations, it's gone too high. Look, there's a couple choices we can have. I mean, we can continue to increase the valuations by the market going up further. We could have a strong reaction to the downside, or we could have a period of I guess, where the market can kind of catch up to itself, so to speak, and breathe a little bit. And maybe as earnings come out and the market, and hopefully earnings go up for most companies, then those valuations can come down without having a really strong negative reaction in the market. Mm-hmm. So it's not necessarily a terrible thing to go sideways for a while.
No, it's not. But it can test the mettle of the traders a little bit, who get comfortable with the consistency of the upward trend in that window, and then get a little bit less excitable when things start to go sideways or choppy. And that's true. That's difficult to deal with. The reminder I'll offer you all is that not every day or even every week is a week or day where you want to be trading. You might find yourself sitting on your hands a little bit. And I would only say, as it relates to that, if you find yourself sitting on your hands, I'm going to say props to you, because that means you're probably following a set of rules that make it important, that are important to you, things that'll define whether you are a buyer or a seller any given day. And if you are out here just trading every single day, you might have a plan, but it's much more likely that you're tied to the action than it is that you're tied to a plan that you've set for yourself. So try and be disciplined. Try and stick to some set of rules. I think that'll go a long way towards giving you the benefit of the doubt in the long haul. Essentially, building in that consistency and sticking to it is really, really key for traders. Now, Brent, we've got a bigger move today in the Russell, and I think I know why. We're going to start with the Russell and looking at this pop to the upside. Now, unfortunately, we've not done anything to the trend. I'm going to remove my oval, but you can see we have really hit our head on that ceiling at the 50-day a number of times. It's unclear whether we could get through it on any rally into that level here in the near term, isn't it?
Yeah, definitely a very different chart than what we saw on, we were saying the NASDAQ and the S&P 500 look pretty similar to one another. Well, this doesn't look that similar. And we do have a significantly lower resistance level that we've encountered. We're at below the, what's that is our 50-day moving average. And so, which we had bounced off of, by the way. And so again, it's not like I want to call it necessarily a super bearish chart, but it's definitely doesn't have the bullish flavor of the other charts we were looking at here. Now, of late, one night, you can see the RSI kind of creeping up a little bit higher lately, maybe showing a little bit of strength, especially after the December run we had. December was not, well, yeah, early December was a really bad time for the Russell 2000, I guess. We've recovered a little bit in that regard. And, I think I know where you're going when you say, I think you know why the Russell's improving a little bit, showing a little more strength. And that's part of the reason why the Russell has lagged the rest of the market. And I assume maybe you're getting to the interest rate thing there, Kevin, but that is... that's a bigger factor on the Russell than it is probably the larger cap stocks.
Yeah, agreed. And it is exactly that. I had a feeling you knew exactly what I was talking about, Brent. So I'm going to let that segue hang in the air, and I'm going right into the TNX. Let's look at the 10-year rate here. And this is what I was talking about. That 10-year fell below the 50-day moving average, and it did, at least initially. We'll see if that maintains for the day. But ultimately, that move is that giving lift to these interest rate sensitive areas of the market. It's not alone in the Russell, right? Russell up nearly 0.5%, but look at utilities popping 0.5%, real estate popping 2/3% almost. So these interest rate sensitive areas are moving upward today, and it's likely got to lean into the fall in rates.
Yes, and so a couple comments on that. I said earlier the Russell was struggling kind of in the early December time period. Well, look at what interest rates did during the early December time period. It just shot way up. Since then, we've kind of had this head and shoulders this pattern. Wouldn't you say there, Kevin, on that 10-year?
Yeah, I can see it.
And is this a break that we're going through now? I don't know exactly in terms of the technical analysis of the interest rate here versus using an individual stock. Keep in mind the interest rates are basically going to be the inverse of if you were to chart out the price of the 10-year note there on that. But what we've had that, that today seems like a significant drop. I don't know if it's going to stick or not here on that, but that's what we've seen on that. Another thing, I don't know. Do you have any more comments on the 10-year here, Kevin, before I want to bring up something else?
Only that I love the call out of the head and shoulders, and the fact is today's action may very well be breaking the neckline of it. Which could mean a more significant move. That might be why we're getting that lift that we're seeing in a couple of areas. But no, beyond that, your next thought. Let's go with it.
So my next thought is, I know in the chat some people, TM said, banks seem to be doing well. Well, one thing is in general, and that isn't necessarily today, but because of the drop in this, but banks have done fairly well of late, partially because of the yield curve, the difference between the 10-year and the 2-year. Banks and other financial institutions do pretty well with that. And when the yield curve increases, because that's a lot of times the difference between what they lend out and what they take in terms of interest rates. And so, there was a time, if you just look at the general trend over the last few months, it's softened a little bit here over the last month. But if you look at that trend, you've seen a fair amount of strength there in the yield curve. Because the yield curve was negative. I mean, everything on this graph you see right here, Kevin basically what he did was he took the 10-year yield and he subtracted the 2-year yield from it. So it's the difference between the two is what this graph is showing. So the zero line, which he drew in white there, anything below that means the 2-year rate is actually higher than the 10-year rate, which is not a normal condition. It's kind of an unhealthy condition is how we probably characterize it. What we're seeing now is a much more normal condition there, and that is one that banks tend to prosper on. So if you look at, say, I don't know, pick your bank, Bank of America or something over the past since June or whatever, then it would have done pretty well. JP Morgan, same thing. It will have done pretty well. Part of that, I mean, it's not the entirety of it, but I think the more normal yield curve is helping a lot of those financial institutions out.
Yeah, it sure is. I mean, look at the financials collectively here. We called out June basically. I mean, this is basically a long-range support for the financials, and that's when the 10-2 yield curve started moving favorably. And you hit the nail on the head, Brent. Why is it so important? Because it's the difference between what banks can earn on money versus what they can earn when they lend out, or what they can earn on lending money out versus what they pay out to those of us maintaining our balances at the bank. And so as that spread widens, it gives them more margin. It gives financial companies greater opportunity. And you can see that it's been positive as the yield curve has moved upward. Well, we've seen the financials benefiting. Now the yield curve is at an area of support, as we just saw. So if that were to be a bounce spot, potentially we could have more positive tailwinds on the financial services industry.
Yep.
Okay, there was also a really good question in here about seasonality. And, seasonality is always a little tricky. And the reason I say that is because there's really only 12 months to work with. So we've got really a tight windows, essentially. But what I can say about seasonality, typically, when I'm looking at least in terms of data, I'm going back about the last 20 years, everybody. The best months over the last 20 years historically have been March, April, May, July, October, November, December. No real shock there, right? Q4 tends to be our more positive months. And in the last 20, our less performers or our weaker performing months have been January, June, August, and September. But again, it's really hard because, Brent, I can tell you, hey, the best month has been this one. But the truth is, the worst months and the best months, they're not humongous disparities, right? February didn't fall, as an example, in the worst or best months in the last 20 years. That doesn't mean February couldn't just be one of utter chop, as we've seen for the last week or two, really. So seasonality is a little tricky, isn't it?
It is tricky. We can go back to just December as an example of that. And it was... normally we'd see some strength. Normally, in general, December's not a terrible month, but it was really bad this past December. And so there's a lot of other factors that play into the mix there. So some traders really try to look at it. I kind of, it's not a big factor very often in what I present here for the reason that I a lot of times it seems kind of unreliable in terms of being predictive of how the market's going to do going forward.
And I think what you just said hit the nail on the head. Unreliable in terms of predictive nature, just like anything else, right? Nothing is going to predict the future for you in a perfect sense. Yeah, you're absolutely right. Ranjit says that's basically all the months. Yeah, that's right. There's only 12, so there's a very limited amount to work with. Yeah, if you give it enough time, you can absolutely define which of those months is your best and which is your worst. But leaning into seasonality as a decision-making viewpoint, I think is one of those concepts that doesn't necessarily benefit us as individual traders, especially if you're trading individual equities. You're going to find your opportunities regardless of seasonal cycles in many cases, if you're a stock trader, I think. So, all right. So, Brent, we've hit up our S&P. We looked at the NASDAQ. We looked at the Russell. We've talked about the interest rates and the relationship with financials and utilities and real estate. We did not, as of yet, look at the semis. Let's take a peek here. We've been undergoing a bit of pressure, and we're going to look next at NVIDIA here momentarily. But Brent, this is really a struggle for us because, of course, we really, as a country, could benefit greatly if semiconductors were back in a true leadership viewpoint. As you can see, all of that enthusiasm we had to the peak has really worn off. And now we're in a lot of consolidation. The question becomes, can we maintain our recent lows, or do we have to get down to a much more long-range area of potential support? By the way, this green line down here, this is the 100-week moving average, Brent, and it's getting caught up with those matching lows we have seen in multiple periods in 2024. So how are you feeling when you look at the semis here, whether it be the weekly chart or the daily chart?
Well, it's certainly not a strong chart. We do have some support. The closer term support level, that's the smaller line you have drawn on that chart there, is, I think, a very key one here for us from a technical standpoint on this. I think, semiconductors had their heyday, so to speak, and they certainly can resume that in terms of leadership position in the market right now. But there's a lot more questions coming out, I think, on them, how in terms of valuations and in terms of competition for a lot of these. And it's kind of a lot of this, the switch to this talk of artificial intelligence and that is has increased valuations on a lot of these. And so it makes it, and so people are questioning how much they're going to go. So from a technical standpoint, as we look at this, I just don't see much in the way of strength here in the shorter term. Longer term graph, like this max graph you have, it goes back a few years. You can see the strength, the trend there. But you definitely, in the shorter term, we've weakened. We've been going more sideways, and we have some key support levels that looks like we're battling.
Yeah, key support and key resistance. I mean, I could even move this on this weekly chart. I could move this down to this zone and probably lean into that a little more. We've had some intra-week tails through that level around 53.50, but we've not been able to maintain it. So maybe that 53.50 becomes a very important level on the weekly viewpoint. Closes over that would be significant because we've not seen a close over that since we've broken down from the peaks. So that all kind of stands out. And again, I know that everybody wants to see how NVIDIA might look. I think you're going to find NVIDIA to look kind of similar here in the sense that below all three of the major moving averages. Check this out, Brent. We've been watching this resistance, what was support, right? And then became resistance. Now we've got support at that last low. But once more, I mean, as always, you can draw any line you want. Doesn't mean it's necessarily valid. But I kind of thought that if I drew one from that August 5th low and captured all of this, I mean, this looks kind of significant, doesn't it? I mean, we had this uptrend that was working well. We had some clear resistance in this vicinity. But Brent, we're below the 200-day now. And if you just looked at what had happened previous, you know what? All of this in here And then you got the breakdown move with Monday's weakness. I mean, is this a possible spot where bulls who bought up the low on Monday are going to be looking to move on? Are they going to potentially say, hey, that trade is about as good as I could have made getting into the 200-day moving average? That's a potential rejection zone, isn't it?
That is a potential rejection zone. And that, from the longer term perspective, the 200 is kind of a key moving average that, a lot of traders will look at, a lot of even investors, I guess, as we look out a little bit, will look at there. And so that's a significant level. And I really think that part of it was with NVIDIA was, there was so much potential, and there's still not, this isn't a negative NVIDIA thing. There's still the dominant player. There's still probably the most important player in this market here, in this semiconductor market. But with all the prospects of the potential of AI, and that hasn't gone away, of course, but it was kind of more of a buy the rumor, sell the news type situation thing, where people were like buying up the value on the potential of this new technology and these high performing chips. And now, we hit kind of this period of, well, it may be a little while before this completely turns into great fortunes for this particular company, given and other semiconductors as well. And so I think from a more of a fundamental perspective, maybe that's what we're seeing. From a technical perspective, yeah, that's a pretty good sell-off, and that 200-day may be kind of a key level. If we can recover that 200-day, stay above that, then maybe that is better prospects for the longer term fortunes of NVIDIA.
Yeah, maybe so. And certainly if you can get through the 200-day, I'm sure there are bullish traders out there telling you, well, then we can at least get back to the gap level we created. And that's a certain a possibility, right? The high in this move was 129. So maybe that gives you the chance to rally back to 129 if you can clear the 200-day. That'd be another 6 points or so. That might be opportunity for the long side for the bulls. But obviously, it remains to be seen whether that 200-day is going to be held for any extended period, even though we're trading right at it right now.
Yeah, and one other thing is, that the 50 days coming down pretty quickly. It's going to continue to come down, assuming that the stock stays down there. We're going to have a cross, so the so-called death cross type situation at some point, probably, unless NVIDIA really rebounds strongly, and that'll be another signal that some technical traders will view as a kind of a negative signal in that market.
It's a good point. We haven't seen 50-day crossing the 200 for a while. We got to go back more than 2 years here. And I think if I went to 3, we would see when it actually crossed to the upside way back here. So right around January of 23, look at the price level, Brent. This is nuts.
You would have done pretty well on that trade, wouldn't you?
That is bonkers. Okay, so even if you were the patient investor who said, I buy when the 50-day crosses the 200 to the upside and I sell when the opposite happens, when the 50-day crosses to the 200 to the downside, well, you could conceivably do just fine in that scenario here, being that that is a long range trend of price action. So, that could be very notable. Let's see if that plays out. Obviously, NVIDIA holders are looking for a bounce that would take us back over that 130, and that's going to then start giving us higher prices, which is hopefully going to turn the tide of the 50-day moving average. But we'll see how that plays out. We're going to continue to keep an eye on it. Big one in the semiconductor space that announced after the bell last night was AMD. Let's take a look here. They obviously broke down. Look, we've been in a rough trend here, everybody.
Yeah, we have.
Looking at the 20-day, you've had the Horner rule might have kept you out of it, right? You've had a couple, two. But looks like day 3 is when things start reversing here, Brent. So maybe the Horner rule would have kept you out of buying into the AMD bounces of late. But this looks just like a continuation, doesn't it?
That looks like a long-term downtrend, and not much reason to to question that downtrend here at this point. So I don't see much in the way of any bullish narrative on this. When you are below, and I've said this a million times, I know, when you're below downward sloping moving averages, that's not a bullish thing, and that's what we have right now.
Yeah, that's no need to get cuter than that, Brent. That's about as good as a good an explanation as you need. I should point out that there are a few notes here from analysts. We've had some lowering of price targets. I didn't see any adjustments to downgrades or anything, but Roth MKM lowered their target from 200 down to 140. That's a significant cut.
Yeah.
But they maintained the buy rating. Bank of America lowered it from 155 to 135, maintains a neutral rating. Wells Fargo lowered the target from 165 to 140, maintains an overweight. And Stifel analysts lowered it to 162, previously at 200, maintains a buy rating. So I find it really notable, Brent. We've had a bad report, bad reaction to said report, and all of the analysts are maintaining their ratings as the stock makes a new 52-week low. I'd like to see that hold up and show some price action benefit, but it's really hard to do that in the midst of an ugly downtrend. I mean, that is just a dichotomy of data that doesn't make sense to the trader necessarily.
Yeah, and like for me, like if I'm looking at it and I'm going, well, let's say I were to say I believe in AMD and I think it's going to turn around. That's fine if you have a fundamental perspective on that, but you also have to have some humility, I guess, in the sense that the market clearly isn't agreeing on the bullish case right now, and it's hard to tell. Like I can't pick bottoms. I don't know exactly when the bottom's going to occur. And so if you have that bullish fundamental view of AMD or any other stock that has a trend like this, then what a lot of traders will do is they'll say, great, but I'm going to wait until we start to get a trend reversal on that before I buy into that for that reason. Now, that could change. That means you're probably not going to get in at the very bottom. I mean, for all I know, today represents the complete bottom of what we're going to see on this. But you could have said that 1,000 times over the past year here, and so the whole catch a falling knife type thing, I think, is applicable. You're probably better off missing some bottoms, but having some extra confirmation than trying to pick the very bottom of a downward move, even if you are bullish on a particular stock. Now, that's not advice on AMD here. I don't know what it's going to do, but just in general, it's tough, even if you're bullish on a stock, to try and pick the very bottom.
It really is. And, again, this is why what we talk about in these segments most frequently is the idea of working with trends. If you want to be bullish, you want to be finding stocks that are already in bullish uptrends, higher highs, higher lows. If you wish to be bearish, you're looking for stocks charts that kind of resemble this, lower highs and lower lows, and giving you areas where you would then shift your viewpoint. The first would be maybe 3 or more closes above the 20-day moving average consecutively, where, like, I called that out, but we really haven't had that dating back to late October, right? So, I mean, I can highlight the instances where we were above it. They're few and far between, but these were the instances where bears were actually clearly in control and could give you a way to manage your own risk, meaning if you traded above it, made any series of higher highs in the short run, short-term bearish traders would probably move on from those trades. You need something different than what's been happening here. So unfortunate for AMD there. We also heard from Alphabet. Let's look at Alphabet. We had some changes to Alphabet targets as well. So Alphabet had broken out in advance of the report, and then it looks today like we got thrown back to the support zone here again, 50-day moving average, but a lot of tails down here as well, Brent. It might be setting up an area for traders to at least manage their risk now, right?
Yeah, and I was wondering after hours when I saw, the numbers aren't good, is the support level going to hold was a question in my mind. And at this point, I'd say that's, it's obviously it's not a good move here. We're down 8%, but the support level has held. And interestingly, that's kind of right where our 50-day moving average is. But I think more important than that is, yeah, all these times over the past couple months here, when we've sold off and gotten to that area about the 190-ish level or so, or a little bit below that maybe. Well, traders have found that, I guess, in a way of thinking of it, this is kind of a cheap time to enter Google, a discount, so to speak. And that's kind of how I think about support levels sometimes. People go, well, why do support levels work or resistance levels work? And I think, hey, look, a support level is a lower price in the stock where people start to think it's more of a bargain to buy at that point. And so when you get to that level, you get more buyers stepping in, and vice versa on a resistance level. That's a level on a chart where people start to go, well, that's stock's getting a little more expensive for what it's worth right now. Therefore, I'm more likely to sell at that point. And therefore, you get more sellers in, and that tends to knock the stock price down. Now, it doesn't hold forever, because at some point, people go, that was a good price to buy before, but now it's not anymore. But at this point on Alphabet, this seems to be a support level here on this that is holding to this point.
Yeah, we'll see if that maintains. A lot of traders are going to watch this one for the next 24, 48 hours, 48 to 72 hours, and see how it acts over the coming couple of days. You want to see that the 50-day provides some support, or that 187 level holds support as well. We'll see if that maintains, but I often say it, that is, here in this segment, when you get selling, it can be pertinent to be patient in the selling process, especially if these are stocks you want to own and you're enthused by the price level at which it's retreated. It can make sense to enter here, but it also makes sense maybe to be patient, give it a couple of days. And I liken it often to just being on the road and moving on down in drive versus going into reverse, right? We're comfortable being in drive, but if we need to reverse, we don't do it directly from going 50 miles an hour forward into reverse. We come to a complete stop, and then we put it in reverse so that we don't leave our transmission on the field back behind us. And I kind of think of it the same way, Brent. I don't want to leave dollars on the floor here. I want to maintain my capital. And so let's see how this acts in this area. 187 to 190, if support's held for 2, 3, 4 sessions, that might give the bulls reason to start deploying money at this level, but remains to be seen. I wanted to highlight these notes. So Google or Alphabet, JP Morgan reduced the price target to 220, had been 232, maintains overweight. Citi drops it from 232 to 229 very minimally, maintains a buy rating. Piper Sandler lowers the target to 208, had been 210, maintains overweight. And then finally, Morgan Stanley at 210 now, down from 215, maintains overweight. So a very big difference, Brent, as it relates to how AMD was digested and Alphabet, right? Adjustments were dramatic on AMD, maintaining maintaining ratings. Alphabet has seen very minimal adjustments, but maintaining ratings. So bit of a different viewpoint there.
Yes. And, it is kind of going to bring us back to the start of our conversation today. The market is off a little bit, but given a really huge move on one of the largest companies in the world, 8%, 8.5%, I think, move down right now. Yep. The market's actually digested it pretty well.
Sure has. We should be, that's a significant development. That's a good point. A big earnings report, a couple of big ones at least, and have been able to weather this storm initially. We'll see if that maintains as we go forward. The last thing I'm going to just point out, I saw that there was a move in crude oil. We've seen a little bit of a build there. I found support, and when I looked at it moments ago, it was seeming to bounce, and it looks like oil is maybe reversing course here in the last 15 minutes or so and pushing lower. So that might bear watching, everybody, because there was good support here, Brent, at 72. Let's see if that maintains going forward for the remainder of the day here. But kind of precarious all of a sudden, isn't it?
Yep. Yep. Absolutely. So let's see. And now a lot of us aren't like necessarily rooting for oil prices to go higher, but
Right.
it's but we are seeing some weakness there.
Yeah, we'll see if that goes. Okay, everybody, we're going to wrap it there for you today. We are at time, but I want to thank you all for being here, of course, and for bringing us your comments and your questions in the chat. Big thanks to Cameron May there. Again, follow the three of us on X, everybody. Cameron May, CS, Brent Moore, CS, and Kevin Horner, CS. And if you like today's conversation, what we'd really appreciate is the thumbs up click down below. That's kind of the applause, if you will, for today's conversation, and helps us out in the algorithm when we get this one replaced or out for replay in our archive, which will happen a little bit later today. So again, thanks for being here, everybody. Have a fantastic Wednesday, and we look forward to seeing y'all again real soon.